Simon, it's good to have you on board.
Thank you for having me. Yeah, I'm good, thank you. How are you, Sam?
Yeah, I'm good. Enjoying the heat wave in London. So.
It's amazing. Summer has arrived at last.
It has, and it seems to be lasting for now.
Yeah,
so
no, it's very good weather out there. I'm enjoying it too.
Absolutely. So, Simon, I'm super interested to actually dive into the crypto space with you today. I am also aware of the fact that my personal knowledge is not that detailed when it comes to crypto space, Bitcoin, and the future, exactly what the past is, where we are currently, historic data, and how can we actually utilize to our benefit. But going back to some of the basics I think would be super beneficial. So if you can actually give us a flavor of that today, that'll be super helpful, because I think there's great investment opportunities for people out there. And also exactly what kind of things to look out for when it comes to crypto and, more importantly, Bitcoin. So before we dive right into the questions, would you mind just sharing with everyone exactly what you do and what your background is and what the future looks like for you?
Yeah, okay. Yeah, it's great to be talking to you about this. It's probably really good for the audience that you have less knowledge about Bitcoin than some other people, because it means that you can ask whatever questions you might kind of want to know to fill in the gaps. If I'm going in too much technical terms or too much complexity, then feel free to jump in and get clarification and make sure that what we're talking about is understandable for everyone that's listening. But yeah, so my background really, I was a software developer for many years, and then became a trader. So I got into finance and was trading as a private trader and doing angel investments into early stage tech companies. But yeah, I first discovered Bitcoin in 2013. I bought some Bitcoin there without really fully understanding what it was. You know, I understood that there was a limited supply of 21 million Bitcoins, and I could see that it was something that certainly was capturing the imagination of some people in that space, and I could see that more people would probably come in and the price would probably go up. But I didn't really understand the fundamentals of the technology at that time, and the idea that this potentially was a new currency that people would use in the place of the dollar or the pound or the euro, that seemed to be pretty fantastical to me at the time. But in more recent years, I've done a lot of research. I've really spent a lot of time looking into what the technology is, and I now see that it has real fundamental value as a potential means of exchange and store of value for people in the digital age.
Amazing. And angel investing, that's a lot of people are not aware of exactly what that term is or what that looks like. For me personally, I can decipher that term to be investing into firms without actually getting involved in the operations of day-to-day running of new businesses and startups. What does that actually look like from an investment point of view?
Yeah, I mean, it involves a fair amount of legwork of going around, meeting people, networking, maybe going to events where you're presented or pitched a startup. And the trick really, in my experience, is to look at many investments and be very careful about what you actually choose to invest in, to do your due diligence and really explore what's going on with the people and the idea and the project, explore the product or the service yourself and see if you really think it has real value and potentially even chat some customers. And that seems to be the real meat of the work in terms of making an investment. Once your money's in, my experience tends to be that the entrepreneur is the person that you're backing, and you really need to let them run with it. You know, there are situations where I've seen angel investors be quite controlling and try to control the entrepreneur, but that never tends to work out very well. Entrepreneurs, by their nature, are people that like to work under their own initiative and make their own decisions. So, for good or ill, you know, you're in on that investment, and you're letting the entrepreneur run with the company and try to achieve a success and make money for both you and them as shareholders in the business. And it's distinctly different from investing in the stock market, because the company you're investing in is unlisted. There's no liquidity there. It could be 10, maybe more years before you actually get the opportunity to sell your shares and make an exit and actually crystallize any gain that you might have made. So yeah, from a cash flow point of view, angel investing is not really a good one for most people. You've really got to be in a situation where you've got money that you can afford to have locked up for a period of time. And in reality, most companies that people do angel investments into will never actually give your money back, let alone a return. So yeah, that's something you'd need to be aware of on the way in.
How do you put that risk on a person? Because, for example, I mean, to establish, in my eyes, to establish a good operations of any business, or that to be a good vehicle for me to invest money into and then potentially get the money out, it's the operations of the business, and it's also the other people within the business. When you're angel investing, you're betting on the entrepreneur and his spirit, and his vision and his passion to actually make things work. So is that pure, like, what's your risk appetite there?
Yeah, I mean, it's very much the risky end of investing. Yeah, the entrepreneur that you're investing in, him or her, could be very good, and that's a judgment that you have to make at the beginning. You know, because entrepreneurs, they're a more unusual breed than people that would do a 9-to-5 job. Yes. So it's really all about their ability to have the tenacity to stick through whatever process they're doing, and deal with the brick walls they come up against, and get over those brick walls and achieve the goal that they've set out to at the beginning. So it's risky. Yeah, it's a risky way of investing. If you get it right, the returns can be many multiples of the money you've put in. So that's what you're really looking for, is not just somebody that's going to come back and deliver you twice your money in 10 years' time. You're really looking for 10x or maybe even 100x of your money over time with that business. And to some extent, that's a factor of how successful they are, but there's also a question of what valuation you get in at the beginning. If you're investing in a company that's valued at 10 million and then really just one person with an idea, you've got to then expect they're going to do amazing things in order for you to actually get above that high watermark of the 10 million there to actually deliver you some return. But if they're more modest and they're at the beginning and they're only valuing their idea at $500,000, then you might be in for a better return on your money when they do eventually achieve an exit.
Understood. That makes perfect sense. All right, so moving straight into the crypto domain. So we've all heard about Bitcoin, especially around 2018-19. There was a big craze, even in the recent years. Yes. Bitcoin has been so big. Then Bitcash came about. That some people may still not have heard about, but it made a lot of money for a lot of people. So would you mind explaining exactly what Bitcoin is?
Yeah, I mean, that's a good question. You know, I think most people know about Bitcoin, as you say. Far fewer people actually know what it really is. And it's something that you can devote quite a lot of time to understanding. And certainly over the years, I've spent time reading books, listening to podcasts, watching YouTube videos, and finding the people that can really explain what it is. And it's a different form of money to anything we've had before. We've had physical gold has been used as money. We've had paper notes that have been used as money, and then we've got digital money in the banks, which we're all used to using. You know, now we all have cards and we use Apple Pay on our phones. Sure. To scan in a shop. You know, you can't see that digital money, but it's there. And we're relying upon the banks, which basically hold a database of our information that has our money in it. So if you're a customer of, say, Barclays, they've got a database with your name, your address, probably other details for you, and they've got a balance in that database. And that is your money. It's under their control. In reality, if they wanted to delete that row, they could. I mean, they wouldn't do it. It would be a terrible, damaging thing for the reputation of the bank if they just started deleting people's rows at random. But yeah, the fact is you're beholden to them as a centralized organization to look after your money for you. And you're relying upon the whole banking system to maintain that record of your money. And that's a trust relationship. You're trusting the banks to look after the money. So with Bitcoin, it's a computer program that keeps a record of everybody's money. And when they talk about the blockchain is basically a single file of every Bitcoin transaction that ever happened. And that file is copied around multiple computers around the world. Millions of computers called Bitcoin miners maintain that file of data, what they call a ledger. So it's a representation of exactly how much Bitcoin you own within your wallet, because they've got a record of every transaction that ever happened. They could say, okay, Sam's wallet with this address has X number of Bitcoin in it. And all of the computers that are working within that network, the miners, agree on what you have.
Okay, question, a stupid question, but I would think that, okay, if it's on a computer and it's open, everybody can see exactly what Sam has in his wallet.
Yes.
Why can't these super, brain-busting geniuses out there can just steal it?
They can't steal it because all of the computers that are maintaining that ledger, they've all got a copy of it.
Right.
That ledger can't be changed. They can only add to it. It's what we call an append-only file. So what has gone on in the past is a blockchain, and the way the blockchain works is each block that's added is a function of the previous block. And if one computer in the network says, okay, I'm going to change it, I'm going to rewrite some part of the ledger so that I have more Bitcoin than I previously had based on actual Bitcoin that I own, so they're trying to corrupt the ledger, then every other computer in the network is going to look at that and say, no, that's not right, you've just changed that. And they would be effectively excluded from the network because their ledger would be different from everybody else's. So it's the consensus mechanism of all of the computers around the world that maintain the ledger, and they all agree that nothing can be changed. So it would require a very large a large percentage of the network, if they all got together and colluded to change the ledger, then they could override the rest of the network and say, okay, we're now going to change it and we're going to award ourselves some extra Bitcoin. Maybe we're even going to break the 21 million limit and issue another extra 100 million Bitcoin just to ourselves. Then they would effectively have more Bitcoin, but they would have corrupted the ledger in that process. So they're not incentivized to do that because the value of Bitcoin is in the fact that you can't have more than 21 Bitcoin. There's the consensus of computers, they're all agreeing they're never going to print more than 21 Bitcoin. And if any part of the network tries to break that rule and give themselves more Bitcoin, then the value of the Bitcoin crashes because they've corrupted the system. So the incentive is to maintain the system. So if you do have millions of computers and you're potentially in a position to corrupt the network, then there's no incentive for you to do so because you're just going to destroy the value of the Bitcoin that you own, Bitcoin that you might be awarding yourself, and all the value that you invested in that computer network is now not going to be worth anything because you've broken the whole system. But if you do have that computer power, what you can do is engage in Bitcoin mining. And the new Bitcoin that are slowly printed, every 10 minutes a new block is created, and new Bitcoin is issued to the computers that contributed to that processing of the transactions. So each new block that's added is processing the transactions that people are submitting. If I'm trying to pay you in Bitcoin, it's going to be processed by that mining network, and that transaction is going to be validated, and they're going to complete that transaction, confirm that my Bitcoin address has dropped by 1 Bitcoin and your Bitcoin address has increased by 1 Bitcoin.
So if the total number of Bitcoin is only 21, then how can there be millions of people having shares of those 21 Bitcoins?
Well, they're infinitely divisible. Yeah, I mean, I can send you 100 millionth of a Bitcoin. That's called a Satoshi. It's the smallest unit that we have created so far. Okay. But potentially we can go smaller than a Satoshi. Right. So in a scenario where Bitcoin becomes an accepted currency around the world, we would be wanting to deal in very small amounts of Bitcoin. Right. So that's it. We've got, so a Satoshi is 100 millionth of a Bitcoin. You've got a milli Satoshi, which is a thousandth of a Satoshi. Understood. So yeah, I mean, it has the capability to be a currency. I think the systems that we currently have, we've got millions of people already owning Bitcoin. Sure. Whether we could actually have 8 billion people in the world all using Bitcoin right now, I think that the systems would be upgraded. We would be making changes to scale to that size, but that's something that we have the potential to do over time.
Okay, so please explain to my monkey brain, because when it comes to the conversation about mining, my mind is thinking mining would be to find more or to create more. That's where my mind goes directly. When you're mining a Bitcoin, what does that mean? Because if you're not creating anymore, then why do we need mining like networks?
Yeah, so the miners are transaction processors.
Okay.
And the way it is decentralized is that the process of processing a block of transactions, it's a competition. So every computer in the mining network will try to solve the next block.
Sure.
And that basically means they need to find a hash of that block of transactions. So if you're a miner, you take the set of transactions that people want to process, and you put it through a computer algorithm to try and find a hash number that has a leading number of 18 zeros. So when Bitcoin first began, they had to find a block with 1 0 at the front. But it gets more difficult as more miners join the network, because the computer that gets there first, the computer that finds the way of hashing the block that results in that number with multiple zeros at the front, they get awarded the new Bitcoin. So part of the block is they have the right to say transaction to my Bitcoin address of 6.25 Bitcoins, that comes from no one. So that's newly minted Bitcoins for each block. So that's the amount of newly created Bitcoins every 10 minutes, because a block takes 10 minutes to create on average. That's the amount of newly issued Bitcoins. When the Bitcoin network first started, that was 50 Bitcoins per block. So the miners that were successful in processing that block would have earned 50 Bitcoins. In April next year, we're going to get what's called a block halving. So every 4 years, the amount of newly issued Bitcoin drops by half. So we'll go from 6.25 down to 6.5 down to 3.25 Bitcoins for each block.
So there are new Bitcoins being issued?
Yeah. Currently we've got about 19.5 million Bitcoins created.
But I thought we were not creating any more Bitcoins.
We're creating them slowly up to a total limit of 21 million.
21 million?
Yeah.
Understood. And what happens when we reach 21 mil?
So with the issuance schedule, because we're 6.5 down to 3.25 next year in April, 4 years after that, it'll drop down to 1.7 something, and it halves each time. So you've got a kind of decaying amount issued. So by 2140, there'll be no more Bitcoin issued to the miners. But the other thing that the miners do earn when they process transaction is a transaction fee. So if I pay you 1 Bitcoin, in reality, what I'm actually going to pay you is 0.999995 Bitcoin. Because the other small part of that goes to the miner as a transaction fee.
So what's the benefit? I mean, if I was to do a cash transfer, for example, I buy a car from you, I pay you in cash, so from my funds from my bank account into your bank account, it's done as simple as, I trust you, I trust these large banks, organizations, they've always kept the money there, I don't have a problem with that. What's the benefit of me doing that in a Bitcoin?
Well, with Bitcoin, it would be instant. I mean, I know we're both in the UK, so you could do a faster payment from your bank to my bank, and it would arrive pretty much instantaneously. And I remember buying cars a few years ago, and we couldn't do that. It was very, you had to kind of banker's check, or you had to find some way of proving, so that when you drove away with the car, they knew they were going to get the money. Because even with a CHAPS transfer, it would take a day. So we've got better technology now within the banks, and it appears that the banks are doing that for nothing. There's no transaction fee on that faster payment from bank to bank. If I was in Australia and I was trying to buy a car from you using my UK bank account, it would probably take about 3 days to get there. So using Bitcoin to make an international transaction can be a lot faster.
So speed is one thing.
Speed.
What other benefits would you say are there to keep your cash for transaction purposes, to acquire goods and assets and stuff, are there apart from? Because, see, I've had this question asked a number of times, and I don't know the answer to this, where it's on an open ledgers, so that everyone can see exactly, how many bitcoins you own, and it's not controlled by a central government. Neither is it controlled by regulated entities like FCA in the UK. So if that's the case, then it's being controlled by networks. And what's actually, what kind of ring fencing is there to protect my money, which is in crypto, Bitcoin, for example, versus, because I know I can always, FCA is, it's a regulatory authority, so I know to some extent my money is protected, which is backed by the government, treasury. What level of protection do I have in crypto?
Okay, so if you were buying a house in England 100 years ago, that would have cost you a few £100s.
Sure.
If you're buying a house in England now, that would cost you a few £100,000. Yes. So what has happened to your money over the last 100 years?
The value's gone down.
Yeah. So it's been quietly taken away from you. Yes. They've been quietly stealing your money from you by creating more money.
Yes.
That's why they do a faster payment for free.
Okay.
Because there's a quiet process of taking your money away from you over time.
Not literally, but reducing the value of it. Yeah. Like inflation and quantitative easing put together, the value of the pound or the dollar just goes
down. That's it, yeah.
Okay.
So this has been happening for, like I say, the last century.
Yes.
We went off the gold standard 1914. So that the money was no longer related to a fixed amount of gold. The money was literally just a promise from the banking system, from the government. But slowly, surely, over time, they take that money away from you.
Sure.
And that is a tax. Okay, if you put it in their bank, you can earn interest that maybe gives you some kind of compensation against that inflation that's happening. But yeah, that's the reality of fiat money, is they very quietly and slowly take it away from you.
So is the same inflation effect not happening in crypto or Bitcoin? Because if there's more Bitcoin that's being printed and it's been broken down into more pieces for it to be acquired by more people, does that not reduce the value of crypto or Bitcoin?
Yeah, crypto I think is something different to Bitcoin. So if you focus on Bitcoin for the time being, we've got that computer program, effectively, that decentralized computer program that ensures that only 21 million Bitcoins will ever exist.
Yes.
And the amount that they're issuing is decreasing every 4 years. So in practice, as more people come into the Bitcoin space, more people want to own Bitcoin, the value of it will go up in the long run.
Correct. Yes.
And obviously there's no proof of that. No one can predict the future. I'm not giving investment advice. If more people leave the network, then the price, in pounds or dollars could go down.
Sure.
But if you believe there's a real utility in having this digital payment system that is beyond the trust that people put in banks and governments, because they are quietly taking your money away, so that's a slow process of breaking that trust that you have in them, then you have this alternative payment system, which is controlled by a computer program, which is open for everyone to see the rules. They can see the rules are consistent there in terms of limiting the total issuance to 21 million. So you're able to own something which you can own in your own wallet, independent of any bank, and you can make payments on a peer-to-peer basis that don't require going through a bank. So did you hear about the story of the Canadian truckers during COVID?
I did, yeah, briefly, but please remind us.
It wasn't well publicised in the media, but during COVID there were truckers in Canada that protested against the COVID lockdown, because the COVID lockdown was very severe.
Yes.
And they felt it was too severe and it was disrupting their livelihood. So they protested against it, a peaceful protest, and Justin Trudeau, who was the Prime Minister of Canada, decided this protest shouldn't be happening, and his method of stopping them doing that was to freeze their bank accounts. So they couldn't take any money out, they couldn't buy any food. So there were people that got together and created a crowdfunding campaign to support the truckers, because they thought it was unfair that the money system was being used to coerce people into breaking up a peaceful protest. So the people that donated to that crowdfunding campaign, they had their bank accounts frozen as well. And then people created crypto crowdfunding campaigns. The crypto exchanges were forced to freeze the crypto accounts of people that were actually donating to that crypto fund that was supporting the truckers. So it was a situation where the digital money system was being used to exert control over people.
Mm-hmm. So so if the government for example, if the government, so this is like, I would say is morally and ethically and on every level is just incorrect. If they're, if they want to keep paying their bills, they want to support their families and stuff, they want to keep working, and now there's no mask, there's no COVID, thanks to Putin. He's just, completely cured.
He did, yeah, it's true.
Yeah, COVID's gone, luckily. But what is actually surprising is, and this is another question, is if the governments and the regulators don't have actually any control over the crypto space or Bitcoin, how are they able to influence even people, donating to these truckers?
Yeah, so the governments do have influence over centralized exchanges. So people like Binance or Coinbase, they're companies that hold Bitcoin on behalf of other people, and they are beholden to the government. If the government say you have to shut down these accounts, then they will, because they have a business that is in the process of being regulated by the SEC and the FCA. And if they don't comply with the government, then the regulation is likely to be a whole lot more difficult, and they could regulate them out of existence if they wanted to. The people that actually have Bitcoin in their own wallet, they have total control over that. They hold the private keys. The only person that can transfer Bitcoin out of that wallet is the person with the private key.
So, okay, so when we say wallet, it's a digital wallet, and it says that's where you have got your own key, and then you have got your Bitcoin in there. Yes. That is actually held somewhere on the cloud, right? That's somewhere in the digital domain.
Yeah, it's held within the blockchain. Yeah,
and and it could be with any of these houses like Coinbase and stuff, places like this where you have your own wallet. Yeah. So don't they have access to your? Because if they say, we don't like Sam, or we don't like Simon, and for whatever reason, we don't like what he's saying, for example, his views are not in line with our values, for example. Let's just say, can they not just say, nope, you can't access it?
If you entrust your crypto to an exchange like Coinbase, you're effectively giving them your private key. They then have total control of your money. Okay. They actually own your money. I mean, your money in a crypto exchange, it belongs to the exchange. Just
like like banking, cash.
Yeah, your money in the bank belongs to the bank.
Yeah.
Yeah, and you can't take your digital money out of the bank. You can take paper out of the bank, up to a certain amount. Yes. There are rules on that now about how much you can take out. But your digital money, you can only send it to somebody else that has another bank account, so it can't really be taken out. Yes. Whereas your crypto digital money, you can own within your own wallet. You can take it out, and you can walk across a border, and no one can take it away from you.
So if I had my wallet, for example, but where is that wallet held? Where is it? Like, is it on the cloud? Is it on my own private server? Where is it held?
It's in the blockchain. Yeah, it's a blockchain record of your asset.
Okay, so this leads me on to another basic but super interesting and very useful question to be addressed. What is blockchain?
So we've touched on that already. That is a file of all the Bitcoin transactions that have ever happened. Mm-hmm. So let's say right at the beginning of Bitcoin, 3rd of January 2009, the first block recorded a transaction from Satoshi to Hal Finney, who was another cryptographer. Sure. And that was a single line of code within that blockchain that said X number of Bitcoin transferred from one wallet to another wallet. And so that's then a record. And then over the last 14 years, you've got multiple transactions within that file. And you can have a piece of software, a wallet is a piece of software, that will basically look at all the transactions and reconcile what is the amount of Bitcoin that your wallet owns.
But that's for public viewing?
Yep. If somebody knows your wallet address, they can look at how much Bitcoin you have. Yeah, they can see that.
Right.
If you choose to give your wallet address to somebody else.
But isn't one of the attractions that it's a public ledger, so therefore it's all monitored by these networks?
Yes.
What you own, what you don't own.
Yes.
So then how is it ring fenced then? Because not everybody wants to show how much money they have.
Yeah, I mean your Bitcoin wallet address doesn't have your name on it. You know, it's a string of characters.
Oh.
Yeah, so it's and you can create as many addresses as you like.
Okay.
So you can stay as anonymous as you want until you take your money onto an exchange.
Right.
If you want to put your money on an exchange, they're going to be KYCing you. They're going to ask
Yes.
you for identification,
Yes.
and then they know who you are, and they can actually trace that one transaction back to your wallet and look at where the money has come from previously. So yeah, that's one of the big misunderstandings about Bitcoin and blockchain is that it's anonymous. In reality, because you've got that long ledger of all the transactions that ever happened, everything is traceable.
Everything is traceable.
Yeah,
Okay.
and but it's only when you actually go to an exchange and ID yourself that people can then say, okay, well, you know, Sam ID'd himself here. I mean, you know, your information with the exchange is confidential with them. So not everyone is going to get your information off the exchange, but if the government came along and said, right, okay, we want to know how much crypto Sam owns, we want to know where it's come from, where it's going to, the exchange can give them that information.
And can anyone, can an entity own Bitcoin on my behalf?
Well, in theory, that's what the exchanges do. Yeah, they're third-party custodians of your money.
So for example, if I set up a trust, can the trust own, with me being the beneficiary, a number of Bitcoins in my wallet, which is not on the exchange?
That's more of a legal question. You know, I don't know if the trust structures have yet got around to having the legal processes for them owning crypto assets.
Understood.
Yeah,
Okay.
because crypto assets, you know, it's not cash in the traditional sense. It's not a company. It's not a share in a
It's
company.
not a hard asset.
It's not really, it's not a physical commodity.
Yeah.
So it's a new form of asset, effectively money, digital money. Digital money that you can own on a first-person basis versus digital money that we've had previously, which you can only own through a bank.
Got it. Understood. So blockchain technology, I know blockchain is actually used for a lot of other purposes in other businesses, supply chain and everything else. And I know that governments are implementing blockchain technology. So it's actually used in more domains rather than just crypto and Bitcoin. Yeah. Would you mind explaining what blockchain actually is?
So blockchain is an immutable record of history.
Right.
So it can't be changed. This is something we've never actually had before in the past. We've had books.
Yes.
Books can get rewritten. Sometimes authoritarian regimes have decided to burn books if they don't like what they say.
Yes.
You know, libraries hold a central store of those books, and we trust them to maintain that record of history.
Sure.
And we've now got databases, we've got computers, we've got the internet, which holds information digitally. But when those databases are centrally controlled, information can be changed. Mm-hmm. Governments can force websites to be taken down, they can force information to be changed. A blockchain is a decentralized record of history that cannot be changed.
Cannot be changed.
I mean, in theory, if everyone in the world wanted to change the blockchain, then we could do it.
Understood.
But it would require an overwhelming majority to actually change what's on the Bitcoin blockchain.
Understood. And we're not talking about centralized governments. We're talking about networks.
Yeah.
Who would agree.
Yeah, so the mining network all hold a copy of that ledger.
Understood.
And as I say, it's a history of all the Bitcoin transactions that ever happened. But it goes, so in some senses, it's a perfect use case for blockchain is money, because that record of what Bitcoin I own can't be changed, except with the private key. Because the consensus of the mining network say that record of that Bitcoin is going to stay with that wallet address until someone comes along with the private key and expressly chooses to move it to another wallet. So it's money that can't be taken away from me.
How are businesses using blockchain technology instead of loans and large credit lines and funding and personal private equity funds and stuff. How is that better off?
Yeah, I mean, we're really just at the beginning of this space. So we're starting to see things developing where if I want to make a payment to somebody in Australia, then the services now that use the Lightning Network. So the Lightning Network is a Bitcoin transaction process where Bitcoin can be sent very fast and very cheap in very small amounts. So the services where I can use pounds at one end, the value is transacted through the Lightning Network. That service then registers an Australian dollar transaction on the other side, and it's very low cost, very fast, very efficient transaction process. So yeah, international transfers are one of the key use cases of Bitcoin. Yeah, I think we're beginning to see other financial processes build on top of Bitcoin, but it's something we're going to see over the coming years. And right now, things like loans, personal equity plans, all of these kind of things that you mentioned, you're probably much better off with the traditional banking system for those services. You know, a lot of stuff on Bitcoin is early stage. We're going to see it emerge. It's a bit like trying to send an email in 1990. Sure. You know, you had to be a Unix programmer to do it with a command line, and that's that. You know, now sending an email is very easy. So we're building the user-end applications. Where you talk about blockchain as opposed to Bitcoin, I mean, Bitcoin is a use case of blockchain. You know, it's money using the fact that you've got that ledger that is a very strong record. It creates a very hard money that I can own and can't be taken away from me, and that has real value in itself. Sure. But you could also use Bitcoin, a blockchain, to store media. So you've probably heard of NFTs. Those are digital files. They can be pictures, they could be audio files or videos that are hashed into the blockchain as a record. So if you take a hash of a video file that you create and you store it on the blockchain, that's a record of your trademark, your copyright of that particular bit of media. And again, if it's a blockchain that's been supported by a decentralized network of miners, and they are correctly incentivized to maintain that record, then you could assume that the record of your ownership of that digital media is going to persist. It's going to be a strong record that will stay for a very long period of time. I think the Bitcoin is probably the best blockchain that exists at the moment, because it has the biggest network and it has the most strongly incentivized miners that are completely decentralized. There's no central issuing foundation, or I mean, Ethereum has a foundation, it has a company. Solana has a company that spends money on marketing to further the project of Solana. Sure. Bitcoin has no central foundation, it has no central company, there's no marketing budget. Everything is completely decentralized, and those miners are incentivized to maintain that network, to maintain that ledger, to maintain the integrity of the ledger, because if they break the integrity, they will be financially penalized with the loss of value in their Bitcoin and the loss of value in their computer equipment that they've invested in to maintain that network. So that's the strength of the record. And I personally think the Bitcoin blockchain will exist for as long as humanity exists, because it's such an important part of our evolution. It's a real once in an existence creation of a new form of technology. Like I say, it's this historical record that literally just won't be changed. I mean, it's wrong to say it can't be changed, because as I say, if 99% of the world's population decided we're all going to change the Bitcoin ledger, then we could change it. But in reality, for all practical purposes, it can't be changed, or it won't be changed. And that's a utility that we've never had before. We've never had that record. So money's the first use case, because you and I don't want to lose our money. We don't want anyone to take it from us, particularly not an authoritarian government that decide they don't like me or they don't like you. We don't want them to take our money away. And this is the most assured way that we've ever invented to have a form of money that we can keep.
So the overall benefits of Bitcoin would be transactional. From transactional point of view, it's efficient, it's cheap, especially if you're buying something overseas or you're transferring money overseas. Yeah. You have optics on exactly what's going on. Excuse me. And number 3 is no authoritarian government can actually take it from me, because it's within my wallet and only I have the key.
So just let's give an example of that. Let's say you're in Australia and I want to send you $1 billion Australian dollars. Sure. Now imagine trying to do that through the banking system.
Yeah, it's a nightmare.
First of all, you've got enormous amount of paperwork. You've got the banks going, what, $1 billion? What's that for?
Yeah,
where did you get it from?
Sure.
And you would have all kinds of checks you'd have to go through.
Yeah.
And you'd have to pay
blood tax.
All kinds of awkward processes. People prying into your business and asking you questions. It would take probably at least a week in reality, that amount of money, and there would be a fee there that would be a substantial percentage of the amount of money that you're sending. Now, if we decide to do that in Bitcoin, it would take 10 minutes. It would cost about $5-10.
Yeah, okay, excellent. So efficiency, speed, convenience, it's all there.
Yeah,
okay.
And it's under your control. We want to make that transaction. No one could stop us.
Got it. Okay. Now, the value of Bitcoin goes up as more people invest into it. Does it work in that simplest structure, or is it different to other currencies? Because there's if you type Bitcoin right now in YouTube, some people are saying, oh, it's going to hit 1 million. Oh, it's going to go down to 10,000. I don't know where it's currently at the moment, but is it the same as you basically, a lot of people pump money into it, a lot of money, people buy a share of Bitcoin, and then the value of it goes up? Is that the case? Yeah,
it's an interesting one, because the first touch point that most people have with Bitcoin is the price, and the fact that the price is volatile, and it's gone from being virtually zero in 2009 up to, it got to like 69,000 in 2021.
Sure.
It's now sitting at about $25,000. So most people see it as this very speculative, very different kind of virtual asset that in some ways doesn't really exist, and yet people are paying money for it, and it looks like a bit of a crazy Ponzi scheme to some people.
Sure.
And yeah, in many ways, it's a startup project. It's a kind of new tech project for a new currency, a new payment system. And because of that, the token itself, the Bitcoin that people use for transactions, has been quite volatile and quite speculative, because there is the possibility that Bitcoin one day becomes a universal currency that people use to transact, because it can have the benefits that we've mentioned over existing digital money that's controlled by governments and banking systems. Or it may end up being superseded by something else, maybe Ethereum, maybe Solana, maybe those things are better. Personally, I don't think so, but some people do. Or it may be that it's just a complete fad and everyone's going to eventually be losing their money and it's going to go down to zero. All of these are possibilities. None of us can predict the future. We just don't know. So that's what creates these movements in the dollar price of Bitcoin. At the end of the day, one Bitcoin is always worth one Bitcoin. It's a question of what can you do with that Bitcoin. At the moment, you can't spend Bitcoin on a great many things. You could, if you're a member of Black's Club in Soho, you can use Bitcoin to pay for your drinks or your food there. There's a number of other places in El Salvador. You can use Bitcoin to pay for things. It's actually the national currency there now. So they're using Bitcoin to pay for all of their daily goods and services, using Bitcoin there, and that's I think a very clever initiative by the president of El Salvador. So if we end up in a world where Bitcoin is used for more transactions, there will be more demand for Bitcoin.
That's right.
And we will all be using ever smaller transactions of Bitcoin to facilitate that payment system that we're all using.
Buying a coffee.
It's possible. Yeah,
just paying from your wallet. Are you able to make payments just from your wallet?
Yep.
Oh, you can?
Yeah. You have a wallet on your phone. You can literally scan a QR code, instant payments with Bitcoin Lightning.
Instant payments. So very convenient.
Yeah, that's the Lightning Network, which is something that facilitates Bitcoin payments.
That immediately would that turn it into another currency?
That's just Bitcoin going from one wallet to another.
Understood. So then if you're paying to, say for example, if you're paying to a business where you just picked up a coffee and a couple of bagels, for example, it will go into their Bitcoin wallet. Yes. And then subsequently, then if they want to turn that into currency, they can through an exchange.
Yeah.
How is Bitcoin different from all the other tokens out there?
Yeah, that's an interesting one, because Bitcoin was the first. And it was the only one that launched without having a company and without having a marketing budget. So it was an open source project that was launched through the mailing list of what they call the cypherpunks. They're a bunch of cryptographers and computer programmers that thought that there could be a digital currency, a computer currency, which would exist peer-to-peer as a network. And that was how it was created, and they started running the software and the computers and transacting with each other. Over time it's grown. You've now got millions of computers running the software, many people like you and I that own Bitcoin in our wallets, and it's spread purely through word of mouth. And the Bitcoin mining process, the way the incentive system is structured, the cost of creating one Bitcoin, the electricity that's used in that process is about the price of the Bitcoin at any one point in time. So because of the competitiveness of the mining network, when the Bitcoin price goes up, there's more miners will join the network and the difficulty adjusts so that the amount of electricity they have to use is about the same as the price of the Bitcoin. And when the price goes down, less people will engage in mining, the difficulty will become easier and less electricity will be required. But it's a bit like gold mining back in the day when people used to use gold as a currency. If the gold price went up, then more miners would be started, and when the gold price went down, the marginal mines would be taken out of the system. So with gold, it's a hard currency, or it was a hard currency, because the cost of mining for gold in terms of time and effort of people was around the gold price. So people saw that as a hard money because they knew somebody had put their time and effort into creating that gold. The same applies with Bitcoin, because the amount of computer time and energy that's been used to create the Bitcoin is reflected in the Bitcoin price itself. So if I'm paying you in Bitcoin, it's a token that represents what we call a proof of work. And that's the way that Bitcoin works. It works on a proof of work system. Pretty much all the other cryptocurrencies work on what's called proof of stake. So if I'm a new cryptocurrency and I issue a new crypto token, it doesn't cost me a great deal to create it. I can use something like Ethereum or Solana to issue a new token. I can issue 1 billion new tokens, costing virtually nothing. But if I put together a really clever marketing campaign, I can convince people that these tokens have worth a higher value, and maybe I can sell them for $1 each. So I've got something I'm creating for next to nothing, maybe spend some marketing money, sell them for $1. So I might hold 70% of these tokens myself. I sell the other 30%. Maybe I pay an exchange to list the token on the exchange. I manage liquidity and maintain the value at a certain level. I've got a great business. I've created something that's costing me virtually nothing. I'm selling it for a higher price. But that's very different to Bitcoin, because I'm in control of that new currency. I can issue as much as I like.
Bitcoin, you can't. It's 21 mil. That's it.
It's decentralized. It's competition to create the new Bitcoin, and you've got to provide that service of processing the transactions. But the system is designed so that the competition requires people use energy, compute power.
Got it.
So that's where I think it's really interesting, because historically gold was used as a currency when the main means of production was human labor, human time.
Yes.
So people had the choice if they could work in the fields and grow food, or they could go work in the gold mine and create gold. But the fact that gold existed and it required that time and effort to create meant that there was a good means of exchange for the food or the services of the blacksmith or whatever you were trading and using that as a medium of exchange. Yeah, so we've now got paper money, we've got digital money created by governments and banking systems.
Yes.
The cost of creating a £5 note probably is less than 1 penny.
Yes.
But the value that they sell it for is £5.
Correct. That's
So we've got 4 different types of money there. We've got gold and Bitcoin, where there's a proof of work system, and if you've spent the time studying the Bitcoin code, you know that it costs money to create a Bitcoin. It costs time and energy. Again, with gold, it costs time and energy to create it. So that's hard money.
Sure.
Fiat money, that's not hard money. That only has a value because the government forces you to pay tax in that money. The dollar is the world's reserve currency. It's recognized as having a value because America has the biggest army in the world.
Yes.
And it's that is the thing that gives people confidence in the dollar. America will always be able to force people to use the dollar because they have that military might. With other cryptos, they've got really slick marketing campaigns, and that's what gives it the value.
Yes, absolutely. That's great to know. So I appreciate your explanation on the difference between Bitcoin and other cryptocurrencies. So just talking about some of the other things that are coming to the marketplace right now, and they do have good marketing campaigns in order to show how effective they are, how amazing they are to pump money into. I think that's another side of where people are making a lot of money right now, because they are putting incredible marketing campaigns through SEOs and X, Y, and Z to actually show people what the 2 or 3 or 5 most amazing cryptocurrencies to be pumping money into. So the money is being pumped in from marketing campaigns to show that these new currencies coming through, they are amazing to invest money into. Yep. Would you say a large portion of that is betting and also timing? So when you pump money into these new currencies coming up or new crypto tokens coming up, you need to ideally get out, and time that like incredibly well. Otherwise, you can potentially lose the whole thing.
Yeah, I think there's two answers to that. I think the utility with some of the new cryptocurrencies being created is real. The NFTs, the smart contracts that exist on Ethereum, very clever innovation. They enabled NFTs to be created. Things like Ripple and Solana were quite innovative in terms of having faster, cheaper payments than Bitcoin. But what we have seen in the last couple of years is the utilities that have been created in the crypto space are now available on Bitcoin. So with Bitcoin, it requires what you call a layer 2 to be built on top to facilitate those fast, cheap payments using Lightning. And that's taken a lot longer to build. The project was first started in 2015. Lightning is now mature and effective as a payment system, but it's taken a long time to do it because effectively people that are building on Bitcoin are building on rock rather than building on sand. So it takes a lot longer to build on Bitcoin, but what you've built is much more durable. With all of the new utilities that come out through these other chains, other coins, they are innovative, they're new, they're interesting, and quite often you see a big leap up in price for these new cryptocurrencies. But ultimately there will be other new cryptocurrencies that will be faster and cheaper and have more bells and more whistles. And the money that is raised by the new issuance of Ethereum or Solana or Tron or some other coin, their marketing budgets will run out. The Solana spent a lot of money on marketing in 2020 and 2021, and the price went up massively. But how much are they spending on marketing now? The Solana price is dropping. There'll be other new cryptocurrencies like Sui or Aptos that are probably better functionally. They're probably faster, probably cheaper, probably more reliable. And they will have a brand new marketing budget they can spend. So the attention will go off of the ones that ran up in the last bull market and go on to the new tokens that are being created, and people will get very excited about those. And people come into the space, myself included, people have a period where they think, okay, yeah, Bitcoin's great, but look at this, it's better than Bitcoin, it's faster, or it's cheaper, or it's got more bells and whistles. And people tend to do what they call a horseshoe, where they start off with Bitcoin because that's the one they hear about first, and they go and explore the cryptocurrencies, and they eventually come back to Bitcoin again, and they realize that whatever they've invested in or whatever they thought was going to be the next big thing ultimately ends up being usurped by something else. So there's an element of clever utility building, and exploring new utilities within blockchain and within crypto is probably a very good thing. But people that are building within these new chains and investing in these new types of currency need to recognize that there may not be durable value in any one of them. The real durable value is with a Bitcoin because of the way it was created, because it is fully decentralized, because of the way that the money costs time and energy to create. That's what creates the durable value, the proof of work system within Bitcoin. So it's distinctly different from every other crypto.
Got it, understood. What are the things people need to look out for when pumping money into new currencies?
Recognize that it's speculative, recognize that they could all go to zero, recognize that there is marketing being spent on making these things look good. You know, they're paying for ads within the internet. They're paying influencers to talk about these things. You know, there is a very clever system to make you think that there's value in these things, and sometimes there may be value. You know, I'm not saying there's no value at all, but it can be quite exciting. You know, in some ways it's a form of gambling. I'd say with all gambling, it's always a question of only risk what you can afford to lose, and always be willing to walk away. But you know, if you're thinking from an investment point of view, I'd say look at the history of the crypto price moves, and you'll see that there's a fairly strong 4-year cycle that goes on there. So the last top that we had was the back end of 2021. Things bottomed out the back end of 2022, and you can trace that pattern back every 4 years since Bitcoin began. Yeah, we had a high at the end of 2017. It bottomed out at the end of 2018. We had a high at the end of 2013. It bottomed out at the end of 2014. So yeah, it's a fairly
based on that projection, looking at historic data. Are we saying that we are potentially likely to see an uplift over the next?
Well, yeah, I mean, obviously, again, none of us can predict the future. That 4-year cycle might not be sustained going forward.
Sure.
But what has made that happen in the past is the Bitcoin block halving.
Okay.
So when the issuance of Bitcoin halves, that's a reduction in supply.
Okay.
Anyone that's looked at economics before, if you halve supply and demand stays the same, then price goes up.
Yeah.
So what's tended to happen is after a block halving, the months that follows, the price has a big run up. So block halving is due in April next year. So if the pattern persists, it may do, it may not, then we might see.
So are you telling everyone to pump money into Bitcoin before April next year?
Absolutely not. No, absolutely not. That's not what I'm doing. What I would say is, I mean, I first bought Bitcoin in 2013. I absolutely regret not really learning about Bitcoin in 2013.
Right. Okay.
So if there's any advice out there, it's spend some time. You know, invest your time in this space. Don't invest your money. Invest your time learning about what Bitcoin really is. Because I personally believe it's a very large part of our future. We're all affected by the money system that we use. It's how we effectively negotiate and work with other people. It's how we exchange value with each other. And if Bitcoin is a better way of doing that, it could mean that we all have a better society going forward. We could have a more frictionless exchange, a more reliable, more open form of exchange between people, then we could have a better society as a result of it. So if people learn about it, potentially they can contribute to this new system, or at least they can find a better way of navigating it for themselves.
Sure.
I mean, uncertainty is always a form of fear for people. So the more you understand it, the more comfortable you can be. And potentially at some point you might feel like you know enough to confidently make an investment based on your own knowledge. But yeah, I would say never listen to other people in terms of investment advice. Do your own research, find out what's really going on, listen to multiple different sources. There's a huge amount of content out there now in terms of YouTube videos, in terms of podcasts and books. There's multiple different sources that you can use, and I would recommend you don't just listen to one person.
Yeah.
Search out, try and test the logic of these people. Look for good reviews, look for people that have been around for longer and seem to make sense about what they're talking about. But yeah.
What would drive the value of Bitcoin to go down to 0 or none or 1?
If there were no people left on the planet, then Bitcoin would be 0.
Okay, all right. And what if the governments, they just decide that we just want to clamp down on this because we're launching our own crypto?
Yeah, I mean, what would they clamp down on? They could ban Bitcoin mining. I mean, China tried to do that in 2021.
Sure.
And it just meant that miners in other parts of the world were making more money because there was less competition.
So they damage their own economy?
Well, yeah, they take themselves out of the system, and they promote the system elsewhere in other countries. So
those miners, if they're established in China, if they're making money, that money would impact the economy in a positive way because it would spend it.
Yeah.
So they indirectly just messed up their own economic situation by banning Bitcoin?
Yeah. I mean, they've banned Uber, Google, Facebook from China, haven't they?
Yes.
They've created their own versions of these
Correct.
things. So that's what they were really trying to do with banning Bitcoin mining, was to create their own digital yuan and try to control the system. That's what an authoritarian state wants to do. They want to control people through controlling the money system.
Sure. Yeah.
I mean, if governments in every single country in the world simultaneously decided to ban Bitcoin mining, then it would be more of an underground thing.
Yeah.
But I mean, for them to control the software that everyone's running on their own computer at home behind a VPN, that would be very difficult.
Yes.
To sort of stop everyone mining in the world.
Yeah.
Would be virtually impossible.
And what's going on with China, talking about China, with this social credit score? Have you heard about this?
Yeah, I've heard about that. I think that may actually be a bit overhyped in the Western media. I don't know if that really kind of exists in the way that people talk about. But yeah, I personally think we do have a social credit score in the UK. It's called Twitter followers.
Yes, it does. It does have an impact on your thought process.
Someone's talking to me and they've got 100,000 followers. Like, wow, you're obviously somebody very important. I will listen to what you're saying.
Yeah, absolutely.
Yeah, I mean, these things exist. And in some ways, it's something that has existed in the internet since eBay first started. When eBay first existed, why would you buy something from someone you don't know? Why would you trust them? It's because of their user review ratings. So
yes.
It's something that's virtually impossible to avoid on the internet. But if it becomes something that's controlled by the government, if they can trash your Twitter following anytime they want, I mean, the American government can do that, and they did shut people down. They shut Donald Trump off of Twitter, didn't they? So
yes.
that was a trashing of his social credit score. He's back on now. Yeah, but people that were talking about vaccines on Facebook, had their accounts taken down without reason. Thought they got hacked. It was actually Facebook.
ESG scores are impacting like these corporations, these privatized firms, to actually behave in a certain way.
Yeah.
Because I think it's our environmentally friendly guidelines, because ESG scores are directly correlated with the credit lines.
Yes. Yeah. I've heard a fairly insipid one of that one recently. Apparently, if Netflix produces a film or a TV series that's pro-environmentalism, then banks give them a free line of credit to fund that.
You are kidding.
That is a level of manipulation that's going on by the ESG movement right now.
That is crazy, because it's based on rating, like a AA, AAA rating.
Yeah. So they've very much got the investment world under their control. And one of the reasons that we've had problems with high energy prices recently is because there's been a limitation of funding to oil companies and energy companies by the investment world, because those companies have a low ESG score.
Hence why you're seeing a lot of larger corporations now coming out, and even privatized firms are coming out to support some of the crazy narrative and dialogue through their media publication and stuff, because they want to increase their ESG score so they can actually get better credit lines.
Virtue signaling, yeah.
That is insane.
Yeah.
That's
There's a lot of people trying to tick boxes in the ESG space these days, and it's very much focused on the environmental side of things, yeah. So carbon credits, the possibility of a personal carbon credit allowance is being suggested. And that's something that could actually form the basis of a new currency that's issued by a government, a carbon-based digital currency. That's a possibility at some point in the future. So, yeah, I mean, the ESGs want to keep an eye on. It's the best way to protect against these methods of control by centralized governments is to watch them, to talk about them, to be aware of them. And they might try to shut us down. They might try to censor us from social media if we talk about these things, but the solution is to keep on talking about it. And if they shut us down from things like Twitter, then let's build decentralized social media systems like Nostr, where we can't be shut down.
That's right. Okay, so talking about these alternative currencies and some digital domains, NFTs. Yes. My understanding is fairly basic. NFT is a media file. Could be a picture, could be a small clip, or it could be an art painting or something like that, which only belongs to me in a form of a digital file.
Yes.
Now, for example, if there's an NFT out there of me, if I drew a monkey, for example, and I decided to stick it on, what's stopping somebody to screenshot that? To say, yeah, well, I've got it, so it's not a big deal.
They can right-click and save. Yeah, that's it. They've got your JPEG just like that. Yeah. So the digital file itself, you can't really own. You know, it's copyable, and this comes down to the very core of what Bitcoin needed to create at the beginning, because people were trying to create digital currencies since 1982, and they couldn't do it because everything that's digital is copyable. So the only thing that gives you ownership of that JPEG is the decentralized network that says your wallet address owns that JPEG. So it's a kind of community recognition of your ownership. You know, they're saying you own that piece of art. And yeah, people can take copies of it, but you have that registration on the blockchain to say that your wallet owns it.
But okay, so here's the question. If it's in a digital format, so in my simple brain, I would think, so like a really nice painting which speaks a million words to me in different ways, and perhaps to you in different ways. That's the beauty of a beautifully drawn picture or something, right? So that painting now is there, and it's tangible.
Yes.
When it's digital, somebody can screenshot that or right-click and save, as you said, in a digital format too. So it's not as exactly the same as somebody taking a picture of my tangible picture, because the value is in the asset of it being mine or not. But if it's digital, then people have access to that digital media. So why is that valuable then?
So if you create a piece of digital art and you register it on the blockchain with your wallet address, that blockchain is a record of history.
Okay.
And that unique reference to that piece of art says that your wallet was the first owner of that piece of art.
Sure.
So you are the creator. You created it. Somebody else might come along and say, look, I've got this piece of art I created. And you can say, well, actually, no, because my record on the blockchain predates anything that you've got with that piece of art. I own the copyright. I am the creator. That hasn't been proven in a court of law. But in theory, you know, you could take a song, you could take an audio book or a video, and you can hash it into the blockchain. You can create a unique reference with a timestamp, with a unique wallet address that says this wallet owns that piece of digital media. So in many ways, it's a copyright system. It's a digital rights management system. There's all kinds of clever things you can do with smart contracts where you can say, okay, if somebody wants to listen to that audiobook, then they need to make a payment, or maybe it's a tip. They can make a tip. When they make a tip, the money goes back to the wallet that owns that piece of digital media. So it's a form of digital rights management.
Understood. Rather than Patreon, it's a subscription model is going into, somebody's paying that tip directly back into the crypto wallet which owns that.
Yeah, it's a pay-as-you-go Patreon.
Yes.
Yeah, because Patreon subscription, we all hate subscriptions because we all get conned into them with a 2-week free trial that we forget to cancel, and 6 months later we find out a bank account we've never used it. Yeah, that's it. So yeah, this is. I mean, it comes down to the way the internet has been funded since it began. You know, because there was no native digital currency. You know, we've paid for things through our data. You know, we've paid with advertising, with our attention. And it's led to a kind of weird incentive system where a lot of media that we get is very attention grabbing, very short attention span, advertising focused media, which isn't ideal. We've moved to subscription style with Spotify and Netflix, but the potential with web3 is to have this pay-as-you-go reward system where you're effectively tipping the creator if you like the content.
Sure. Okay, so talking about crypto, Web3, please explain the difference between Web 2 and Web 3. And is there Web 4? What is it? What's the difference in these platforms?
So yeah, I mean, Web 2 is Facebook, Google, where you have centralized databases of media, where people are giving away their media for free. The platform, the utility, enables anyone to access that media, and the kind of the subtle contract there is that they will push advertising into your vision. So you're paying with your attention, they will collect data on you, and they will analyze your behavior, your data, and send you ads that they think are most likely to get you to go and buy something.
So Web 2 is media platforms, social media platforms.
Centralized social media platforms.
Centralized social media platforms. Web 2 doesn't stand for the whole internet.
No. I mean, you had Web 1, which was things like email, static websites, where people created a website and they put content on there and you could read that as a customer. Web 2 was really where you had read and write, so you can put your data into Facebook.
Sure.
And other people can see your pictures and whatever you post on Twitter or any other medium like that's Web 2. But the big difference between Web 1 and Web 2 was that Web 1 never made any money. VCs put a huge amount of money into it. You had the dot-com boom. You had the dot-com crash when people couldn't figure out how to make money. With Web 2, you had the click-through advertising link, where you could track the user data through from one website through to the other. The advertiser could keep a record of who was paying, coming from which website, and what their data was, and collate that data and use it to target the advertising more effectively.
That's where Google became a monster.
That's where Google and Facebook finally figured out how to monetize the internet.
Yes.
Yeah, all based on advertising, all using your data. Hence we have the big brother surveillance internet that we have today.
Got it.
No one really planned it that way. It's all because we didn't have Bitcoin.
Explain that.
So we didn't have a native digital currency that we could use to pay for content on the internet.
Right.
So the only way for internet companies to monetize was through advertising.
Yes.
The most efficient way for them to sell advertising on the internet is to sell your data to the advertisers.
Yes.
So that they can use your data to send you advertising that gives them the highest return on investment.
So do you think it's too much of a big monster now to come away from? Or the structure of advertisement and algorithms reading people and their expressions and their trends and their emotions, reporting it right back for you to basically just be, I wouldn't say always manipulated, because I think sometimes it's actually to the benefit as well, because I go onto Amazon so many times.
And they know what you want, and they deliver it to you very quickly. Yeah, so I think, I mean, you know, we've got here very quickly. I think, I mean, even just 15 years ago when Facebook was really kind of first getting high usage by a lot of people, we didn't imagine that they were actually selling our data. We didn't imagine that Gmail was reading our emails and selling it to advertisers, and that's why they give us all this storage space for nothing, you know. But now we all know it. You know, we all know that they're doing this now. So it's, you know, things are changing very quickly, and it's going to be interesting to see as more services become available where your data is not being sold. And these things have been built on top of Bitcoin now. There's something called Nostr, which is decentralized social media, where you can't be taken down, and there is no advertising, and you're literally paying peer-to-peer to other people for their posts. So you might post something on Nostr, I think it's funny, I'm going to send you 20 satoshis, which is worth fractions of 1 cent. But if you've got a massive following of millions of people and they all send you 20 satoshis, you can make quite a lot of money. If you put this podcast on there, you stream it through Nostr, people might come and send us sats for that one. So it's going to be interesting to see how that one evolves, because it's a different model where content is still given away for free, and people are choosing whether they want to pay for it, whether we want to support that creator with these micropayments of cryptocurrency.
Understood. Makes sense. Where do you see the future of Bitcoin going potentially, based on probability and based on keeping in mind that the centralized governments might be coming out with their own currencies to kind of, you know, leverage control over? Because I do believe that it's going in the right direction. The space of currency, digital currency, is future for sure, because of the efficiency and the cost of money transfers and so on and so forth. So 100% is the way forward. But where do you see the future of Bitcoin?
So Bitcoin is the democratization of money. It gives control of the financial system back to the people. and it is also the democratization of digital media.
Simon, this is a like, I don't mean to sound cynical, but we're talking about governments. We're talking about the powers to be. If they can't control it, then, democracy, we know, democracy is still within a framework.
Yeah, how are they going to stop Bitcoin? If I've got software in my computer and I use it to send value to your software on your computer, how are they going to police software on people's computers? Are they going to send men around in black jackets to search my computer equipment and see if I'm running Bitcoin software? You would have to have an incredibly authoritarian government to prevent what's going on now with computer software. You can't stop people writing software. You can't stop people using software. If they shut down the entire internet, we're going to have far bigger problems than not being able to use Bitcoin, because we're dependent on the internet for so many things these days. Digital communications is the core of our society now. We're dependent on it, and the government's dependent on it. To take that away would be incredibly disruptive.
Yes, absolutely. Absolutely. And they can't replicate Bitcoin.
They can't. No, they can't replicate the decentralized nature of Bitcoin. They can create. It's like I said, the decentralized network of computers that voluntarily devote their computing power to processing the transactions. To try to grow that network from scratch now, without having a marketing budget that would require that you're selling the tokens for more than it costs to create them. That just doesn't, that wouldn't be possible now that there are multiple competing cryptocurrencies that do have a marketing budget. You could never get the attention of anyone because it's now a jungle. There's so much going on there.
Understood. All right.
And yeah, governments can create their CDBCs, they can try to force people to use them, but they will always be unlimited supply. The nature of the government, they want to be able to fund themselves through issuing more money.
Sure, yeah, absolutely.
And any government that doesn't have that plan will never get voted in, because we're all stupid enough to vote for the government that gives us free money, in theory.
Yeah,
what we think is free money, yeah.
Yeah, absolutely.
They always spend more than they tax because they can print more money. If you had a government running for office that said, right, we're going to spend less than what we tax.
Yeah, this is exactly what happened back in, when all the bounce back loans were given to people, and they were like, yeah, free money, let's buy cars and watches. Yeah. And then subsequently, what they didn't realize is your nappies and your grocery shopping is going up, and not in far future.
That's it.
So you're paying it back.
Yeah, all the free money that was given away during COVID, the furlough payments, people are now experiencing a situation where the rate of inflation is higher than the rate of wage increases.
Correct. Yes.
So you're now paying for it. You don't really get something for nothing. That's the reality.
What do you think of ChatGPT and AI?
Yeah, it's fascinating. Yeah, it's a large language model that is very, very good at guessing what I mean when I say something in English. And it's very good at searching a very large database of the internet and guessing at what the best answer is in English. And sometimes, most of the time, it gets it right. So I use it for all kinds of research, content writing, mathematical problems that I need solutions to. It's amazing for that. Is it going to become artificially intelligent and conscious and control all our lives? Probably not anytime soon. I don't think so. No, but yeah, it's like we're living in a science fiction world now. In Star Trek, they used to talk to the computer in English and it would talk back to them. And we're not far from that now. Yeah, we've got Siri. Okay, Siri's not that good. Alexa's a bit better. But yeah, if you've got a good, voice recognition with ChatGPT on the other side, then you're not far from the Star Trek world. Yeah, so it's interesting to see how this one is evolving, and it's going to change the workplace for a lot of people. A lot of people's jobs will be changed.
What is actually stopping? Because we already have humanoids, so the robots that look identical to humans, and then you have a language model, so you can just take linguistics and program that to actually replicate exactly what ChatGPT is saying, right? Responses. So you put those three things together, you create a perfect human, right? Now, I'm not saying that is a perfect human. I'm saying it's closest thing. But ChatGPT IQ pass rate, it's indicating 156 right now. Einstein was 160. So ChatGPT is already more cognitively enhanced than most humans on the planet.
Yeah, again, we're in the world of science fiction here. We've all watched the films where you have replicants and robots that look as human as humans are, and how far away from that? Probably 10 years. We'll probably see robots walking around that sound like humans, look like humans. Is it going to be the threat that is portrayed in some science fiction films? Well, we will have to see. I mean, the reality is there is no stopping the process of technological progress. All we can do is be a part of it and try to influence the direction.
Influence the direction. Yeah. Understood. How do you influence the direction of someone who is likely to know more than you from simple, because it's evolving at an alarming rate? And I don't mean to sound like a theorist here, but I'm like, if it's evolving 24/7 whilst we still need some sleep at night, how do you try to influence?
You try to ensure that the computer systems we build are under the control of human beings.
What about the AI?
So currently, every computer program will only do what you program it to do.
So humans can still control. So it's not like genie out of the box. It's now like game over.
You could have AI systems that will build new AI systems. Ultimately, they're only doing what they're programmed to do by humans.
Got it. Okay. So we still got a cap on that. Excellent. Simon, it's been a pleasure talking to you. Thank you so much.
It's been fantastic.
So much.
Thank you very much, and I hope to speak to you again soon. Sam.
Absolute pleasure. Thank you.
Cheers.